How to obtain a high credit score, crucial tips to maximize your score. The purpose of this article is to help you understand the process of managing your credit well. It is not designed to encourage you to take out more credit but to give you some basic information on how to manage your existing credit wisely. The first time you open a credit card, your score will increase by approximately 5%. It is only after the first year that the score will increase at a rate of 1 point per year. It is always recommended that you spend no more than 30 to 40% of what you earn. Explain like I'm 5. Credit scores are a number that is used to determine your credit worthiness. A good credit score means you will be able to borrow money at a lower interest rate or qualify for better rates on loans and credit card offers. A low credit score will hurt your ability to purchase a home, car, or even rent an apartment. It is very important to maintain a good credit score. Understanding credit. How you obtain a credit score and the credit scoring methodology can be confusing. But if you follow this article, you'll be armed with the knowledge you need to reach your credit score goals. Did you know that your credit score is one of the most important factors in financial decision-making? It affects the interest rates you pay on your mortgage, car, and other loans. It can even affect your chances of getting a job. In general, the higher your credit score, the better terms you'll receive from lenders. For example, a high credit score means you're less likely to get a high interest rate on a loan. The lower your credit score, the higher the interest rate you may have to pay. Your credit report. You'll also need to maintain a very strong credit score if you hope to buy a home. That's because a high credit score can help lenders decide whether to give you a loan. Your credit score is based on the amount of debt you owe and the value of your credit cards. There are 3 credit bureaus that keep track of your credit history. You can get your credit reports from each of these agencies every year, free of charge. They are TransUnion, Experian, and Equifax. What is a credit score? Credit scores are the 3-digit numbers that lenders use to determine whether you're likely to default on your loans. One of the first things lenders look at is your credit utilization ratio, also known as your credit-to-debt ratio. This means the amount of available credit you're using compared with how much credit you have available. For example, if you have $10,000 in available credit and $5,000 of debt across all of your accounts, then your credit utilization ratio is 50. This metric is commonly used by banks to determine whether you need a personal loan. If your credit utilization ratio is too high, then you may not qualify for a loan. Obtain a high credit score. It is essential to get a high credit score. This is necessary because credit card companies, banks, and many other creditors require a higher credit score when you want to obtain financing for a car, a mortgage, or a personal loan. So, once you are able to obtain a high credit score, you are in better financial standing. The first step to getting a high credit score is by making sure that you have no errors on your credit report. Credit bureaus are required by law to investigate any inaccuracies on your credit report and to correct those errors. If they fail to do so, you can dispute those errors with the credit bureau. The second step is by disputing any negative information on your credit report if it is inaccurate or outdated. You can do this by sending a letter to the credit bureau and requesting that they remove the negative information from your credit report. If the credit bureau fails to do so, you can then dispute any negative information on your credit report, as discussed above. You can do this by contacting the credit bureau and requesting that they remove the negative information from your report. If they fail to do so, you can dispute it further with the bureau's dispute resolution staff by sending them a letter through certified mail. Have multiple credit cards. If you have a credit card with a high credit limit, you are likely to be more careful about spending than someone who has a card with a low credit limit. The way to build a good credit score is to have multiple cards, not just one. Credit utilization is also important when it comes to paying back your balance. Paying off the balances on your cards every month is key, and having multiple cards to put that money towards is the best way to maximize your credit score. Many people think that their credit score is based solely on their payment history, but it's not. Credit utilization accounts for 30% of your score, which means you can have perfect payment history, but still see your score drop if you owe too much money. You don't want to pay off all of your cards every month because you need to keep some available credit in order to apply for new cards or loans if necessary. You should try to keep the amount owed on your cards about 20% of what they're able to hold, which will help you maintain a healthy credit score. Build your history. Build your credit history with a low-interest credit card or line of credit. For the best chance of success, try to make on-time payments on all of your accounts. That way, you'll develop a positive payment history that will help you get better loan terms in the future. Try not to close any of your credit cards, even if they end up in collections. They are still an asset that you can show lenders. The good thing about building your credit history is that you can put it to work for you. You can use your credit history to get approved for a car loan and thereby get yourself a car. Keep track of your payments. How do you pay off your debts? Most people just pay what they owe every month without any particular system or strategy. If this is how you pay off your debts, you could end up in a negative balance again in no time. That is why you need to follow a budget and keep a log of every purchase that you make. You can use this information to set budgets and create rules so that you don't end up in a negative balance again. A lot of people use spreadsheets for this purpose, but those spreadsheets often end up with formulas that are hard to maintain and slow to run, and thus hard to update. A database, on the other hand, is simple to manage and easy to refresh. It was created for just this task. By using it, you can be sure that your data is up to date. I personally use Walnut Money Manager to get to know my spendings. Keep your balances low. People are always tempted to use the maximum credit limit on their credit cards and then eventually have to pay off the entire balance. This is not a good idea. If you can't afford to pay it off, a credit card with high interest rates is not a good option. You should keep your balance low and avoid carrying a balance on your credit card. Part of the reason that people use their maximum credit limit is that they don't realize how much interest they are paying. The interest you pay varies, but it can be anywhere from 15% to 25% annually. This means that if you have a $3,000 balance and you only make the minimum payment, it will take you about 4 years to pay off your debt. This creates unnecessary stress and makes it harder to get out of debt. Negotiate lower interest rates. When you pay your balance on time, you have the option to negotiate a lower interest rate with your credit card issuer. If you pay the minimums, you have no option. You can apply for a credit card with a lower interest rate. There are several cards offering 0% promotional periods, which can save you money. Be sure to negotiate the promotional period and sign up for the minimums. Add additional income sources to bolster your score. This is the time to start looking for some side hustles, whether that means being a dog walker, a freelancer, or even being a content writer. You can have a lot of fun with that. There are a lot of companies out there that will pay you to do simple tasks from the comfort of your home. In fact, this is a growing market and it is almost impossible not to have heard about this. A simple Google search will give you plenty of results. Additionally, if you are planning to buy a home, start applying for a home mortgage before your credit score is ideal for getting one. This way you will be more likely to get approved for a mortgage. Once your credit score improves, this will become easier and cheaper.
Conclusion.
Reading this article should help you learn what steps to take to ensure that you're maximizing your credit score. The more you follow them, the faster you'll be able to build up your credit score. If you want more information on the topic, please subscribe to our newsletter for weekly updates on important topics like this one.